I came across this article recently which spoke about Tether minting most of the USDT just for two firms. One of them is Alameda, and the other one is Cumberland, right? And this article was written over a year ago, but it makes so much sense as of today, right? In fact, I dug deep on this article, and then I tried to look out for other information about USDT Tether, what's their financial stability and so on. Because if Tether does crash, if it depegs from $1, just like what happened to USD and Luna, then the entire crypto market could crash very, very badly. Right, let's start with this. Tether distribution. This is over a year ago, but it looks something like this, right? Where a bulk of it, right? In fact, there are other reports says almost 70% of it, right, just went to just two firms, right? This is of course dated article, but we're taking that data. It went to two firms. One is Alameda, the other one is Cumberland. And if you look at the other names on this list, right, there is Nexo, there is Jump Capital, there's Three Arrows. All of these, or many of these are in serious financial trouble right now, or have already collapsed, right? Like Alameda, for instance. So it made me wonder, like, is there like something going on? Are all these guys somewhere together in this? What's really happening? And I tried to dig deeper. And so I thought, dug deeper to try and answer three questions, right? Like, what is Tether really? Right? Will this one USDT to one USD peg really hold? Right? Can it crash? And cryptos and exchanges that will immediately get affected in case this peg does not hold. Right? That's what we'll try and answer in today's video. To begin with, what exactly is Tether? Who owns it? Well, Tether has a company called iFinex, which is the company that owns and operates two subsidiary companies. One is Bitfinex, the other one is Tether. Now, Bitfinex is an exchange, right, and Tether is a stablecoin. Right? Now, why is stablecoins important? Because you cannot, for instance, go to McDonald's and pay with Bitcoin because prices keep varying. The price of your burger between yesterday and today could significantly vary, maybe by 30%, 50%, you never know. So stable coins are important to absorb the volatility and ensure that you have stable prices, and so that you don't keep converting back to fiat all the time. There are a lot of use cases, and Tether was one of those to first capitalize on this. Bitfinex is an exchange which has very close ties to Tether, in fact very controversially close ties, and the relationship between this is what is probably at the heart of this whole controversy. Now, recently Alameda crashed, right? And after Alameda crashed, there are a lot of speculation that because Alameda and FTX were so closely linked to USDT, will that crash affect USDT? Is there, is USDT Tether on shaky grounds? There is a lot of questions people are asking, especially because Tether is not just selling USDT, right? So what Tether is ideally supposed to do is, if you want a stable coin, you give Tether a US dollar, and Tether will mint one USDT and give it back to you, right? So Tether takes cash and gives you a USDT. But if you look at their financial data that they themselves have put out, they are saying that they have given secured lending to people, right, which is as much as $6.1 billion as of 30th September 2022. We'll come to that in a minute, but this is really, really, really bad. And Tether continues to assure the market, saying that, hey, we have nothing to do with them. In fact, they put out this entire blog saying that, we have no risk from Alameda, right? Their exact statement was that USDT is issued when institutional parties send USD to Tether, and Tether issues USDT on a one-to-one basis. Right? However, this is not entirely true, because Tether continues to state a lot of things, but it is not always true. In fact, they have this entire research report, transparency section on their portal. We'll come to this in a second, but before that, we look at this. Right, the Attorney General of New York. Right, they conducted an investigation into Tether last year, and they came up with a few interesting facts, right, which is all listed in this particular post that they put out. But I've summarized the key points here, which I will walk you through. So what did this New York AG really find, right? First thing they say is Tether's claim that its virtual currency was fully backed by US dollars at all times was a lie. So what Tether is saying in this blog post about them having no exposure to Alameda could also probably not be trusted, because they have lied in the past about them being fully backed. The second point is that starting no later than mid 2017, Tether has no access to banking anywhere in the world, and for periods of time, hear this out, held no reserves to back tethers in circulation at the rate of $1 for every tether. That is incredibly bad. In fact, it's almost like they were printing money out of thin air and people were just trusting them. It's as good as fiat currency, right? Isn't that somewhere else where we've heard this concept? Then Tether published a self-proclaimed verification of cash reserves in 2017, which turned out to be a managed affair, because the cash has only been placed in Tether's account on the very morning of the company's verification, and then immediately, right, from November 1st onwards, that money started moving out. From November 2nd, Tether began to transfer funds out of its account. One day after they again did one of their self-proclaimed verification of cash reserves, right? So hundreds of millions of dollars moved from Tether's bank accounts to Bitfinex's bank account, right? You remember Bitfinex, which is the exchange which is also owned by the group that is controlling Tether. So all these are transparency reports that Tether is really putting out on their website is not exactly to be trusted, because they put out one every quarter. But if we don't know if this is really true, right? Somebody's coming out and saying, hey, this is what we saw, but even if that's what they saw, that could be only on that particular day, because we have seen in the past Tether managed to put some money there. So maybe on 30th of September they put some money there and they said this is how much cash we have in our bank account, but on the very next, on the 1st of October, they moved that money out. It could be borrowed money, it could be someone else's money, it could be customer funds from Bitfinex, for all you know. So they moved that money out and put it back. In fact, the other risk here really is Bitfinex, right? Because their funds are not really ring fenced from all this. So if Tether goes down, Bitfinex's funds could also go down. So any user of Bitfinex should also be very worried at this point of time. Then on April 26, 2019, after the office of the AG revealed in court documents that approximately 850 million had gone missing, and that Bitfinex and Tether had been misleading their clients. Right. So if you're a customer of either of them, then you should be really worried. And this is over a year back, right? These are details are from over a year back. And honestly, if things were this bad back then things could not be any better right now, because in fact things could be even worse, because if you had lent money to anyone, it's highly likely that they would have crashed by now, because so many companies have already crashed. So what I did is I took these numbers that Tether themselves have given out, and I tried to make some sense out of it to see if there is actually an effect. Is there something that will go wrong, assuming that these numbers are right? So Tether, in each of these reports that you have on their transparency page, gives you a full breakdown of their assets, right? And they tell you not a full breakdown, they give you like a high level breakdown saying that, hey, this is how much we have in commercial paper, this is how much we have in cash, this is the money market funds, the treasury bills, and so on, right? And they will tell you what is the total assets, and they'll tell you what is the total liabilities, right? And what I did is I put that together on this Google sheet, which I will link in the description. You can go through it. So I've put this together for the last 2 years, from at least 31st of March, from when they started reporting this properly, and I did a little bit of an analysis. Right now, the first thing that really came into my observation is that there are two sections to this. Right, the first one is that you have cash and cash equivalents, or something that is of a short-term nature, like US Treasury bills, or you have money market funds, certificates of deposit, and so on. Now these are fairly low risk or no risk, and that can be liquefied easily. So you could say that this entire amount here might be safe, assuming that this is true numbers. This is pretty safe. Then comes the second part of it, right? Corporate bonds, other investments, and secured loans. Now these are risky, right? In fact, we are not aware of the risk categorization of this. Of course, they have tried to give something out there, but it's not true, or we don't know if it is true. So we're not completely aware of the risk that is associated with each of these three line items that Tether has given in their report. Right, now let me zoom in over here so you can easily see it. Let's start with corporate bonds. Right, now what are corporate bonds? Now, corporate bonds are issued by companies who want to raise funds, and they most likely are not, they might not be secured for all you know. So we're not really sure if they are secured or not. And we don't know how much of those are in precious metals and other things that Tether has really mentioned. So this is quite risky. Then there are other investments, right? This could be digital tokens, right? This could be cryptos that they're holding. This could be Bitcoin. This could be anything, which means that basis changes in volatility, big basis volatility, this price or the value of these investments go on changing. So you're not really sure how much it is worth, right? In fact, we saw in the Volt video that we made that Volt, although has Bitcoin and several other cryptos, because the value of Bitcoin has fallen so much, they have a $70 million hole in their balance sheet, right? Between their assets and liabilities, they have like a $70 million mismatch. Of course, a large chunk of it is the USD that just blew up. But even here, we don't know what is the constituents of this. Then there is secured loans, right? This is very interesting, right? And if you see the secured loans, it is from 31st of March, where it was 3.1 billion, to 30th of September, where it is 6.1 billion. The secured loans have just nearly doubled, right? And this is very fishy. Why are you giving $3 billion worth of loans when the market is going down so badly? And who are you giving this to? If you're giving it to crypto companies, then that's really bad. Because if these loans go bad, then this entire money crashes. And as a percentage of total assets, this has increased from, let's say, about 15% last year to something like, at the peak of 20% and 17.5% right now as of September 30th. This entire portion is very, very risky. Right? Just imagine, even if, let's say, 10 out of this 17%, 10% goes for a toss. That means for every dollar or every USDT, Tether will only be able to give back 90 cents. And the panic in the markets when that happens can completely depeg USDT and crash the entire system. And in fact, this can have cascading effects because there's so much of leverage in the market. There's so much of interconnections. There's so much of network effect. This can have a severe cascading effect, and exchanges around the world could severely collapse because of this. There's another part of the story. Right now, each asset that Tether has sort of put together, or where they've invested their money that they probably have, each of these assets has a certain amount of time that it takes to liquefy. Right? For instance, if you go and ask Tether, hey, this is a USDT, give me my USD back, they might not be able to give it to you immediately unless they have that much of cash that they can easily liquefy. If you look at the cash and bank deposits, which will take typically 2 days to liquefy, that's only about 8.9% of their entire assets. Right? They have treasury bills, they have commercial paper, right? They have non-US treasury bills, which could take all the way up to 180 days to actually liquefy, right? Anywhere between 2 days to 180 days. Right? And then there are all these bonds, investment secured loans, which we are not really aware what is the tenure of them, but conservative estimates, let's say it takes a year. In fact, some of these could take even longer. Conservative estimates, if it takes a year, and if we do the math, Tether might need approximately 138 days to liquefy all of their assets if they have to repay people the entire base of USDT that they have minted. If there is a bank run, Tether is in serious trouble because the amount of liquid cash that they have that they can put together in under a week is probably like 18-20%. Right? If the USDT ever depegs and it goes down to 90 cents, it has already gone down to 95 cents. Right? If it ever goes back to if it goes to 90 cents or anything less than that, there will be panic in the markets, and people are going to dump USDT. And when that happens, and when Tether is unable to liquefy some of their other assets, just because it takes a little bit longer, it might take a week, 2 weeks, 1 month, or even 6 months to liquefy, the market is not going to wait for that. There will be panic in the markets, and USDT itself could completely crash, just like what happened to USD. Right? That's how bad this situation is. Now, having said that, if that ever happens, who is likely to get affected? Well, USDT has been sent predominantly to a few exchanges, right? We saw one of them is Three Arrows Capital, right? Three Arrows Capital had invested that in Compound and Aave, and a lot of money from that was sent to Three Arrows Capital was also invested in Grayscale Bitcoin Trust. Right now, these are probably players who could get severely affected, and we already know that Three Arrows Capital itself went down. Then there is there's Daltech, right, which happens to be Dalchain by Daltech. Now, Daltech is the bank which Tether as well as FTX coincidentally bank with, and they received about $908 million worth of USDT. In that, right, about 694 million went to Bitfinex. Right now, Bitfinex might be the first casualty in all this because Bitfinex is so tightly coupled with Tether, and 211 million went to Kraken, and only about 1% or so went to Binance. Right, so Kraken also might be at severe risk. And there is Tron, right? Justin Sun received Tron's Justin Sun received about 200 million. So anywhere where he has personally invested could be a place. Because all this is so tightly connected, it's highly possible that Tether was the currency that was being sent out to something like an FTX Ventures, who invested that into several Web3 startups around the world. So a lot of venture capital money that is going out there in the world could be money printed out of thin air. That's how bad the situation can turn out if things really go south. Right? I have linked all these articles and my sheet in the description. You can go through all of it. What do you have to do? Well, if you do have some exposure to this, try and stay away from it. In fact, one of the best strategies that I heard so far is somebody who's trying to short USDT. Now they are borrowing USDT and they are supplying DAI, because DAI is probably more stable. So they're betting on DAI to stay on while they're betting that USDT might just crash. So a lot of the interesting things that people are doing. That's one of the strategies that I heard. Tell me what do you think about this in the comment section. If you like this video, subscribe to the channel, tell your friends about it, and welcome to the Wave Crypto Club.